This is Chad Stayskull, President of Eagle Wealth Management. I'm here with our Educational Economic Update for February 2017. In this month's video, we're going to discuss some of the major headlines that influenced markets in January, as well as hopefully provide you with some insight into what these developments could mean for you as an investor. So, do you remember where you were at this time last year? In January 2016, the markets were in a slide and filled with volatility. In fact, fears about China's economy contributed to the S&P 500 and Dow experiencing their worst ever 5-day beginning of a year. However, 2017 is off to a very different start. This January, we saw the three major domestic indexes each reach their record highs, and the Dow surpassed 20,000 for the first time ever. We learned that personal income grew by 0.3% in December, totaling a full-year average wage increase of 3.5% for 2016. Retail sales also increased in December, ending up 4.1% for the past year. Right now, we're also well into corporate earnings season, and many reports are beating expectations. As of the end of January, blended earnings were up 7.1% in the fourth quarter, and revenue, it increased approximately 4.2%. Despite this positive data, the economy still has opportunities. In January, we learned that gross domestic product, or GDP, lagged in the fourth quarter of 2016. It showed 1.9% growth compared to the third quarter's 3.5% measure. As of the first estimate, real GDP increased by a total of just 1.6% throughout 2016. If you look more deeply at the numbers, however, you're going to see that many aspects of our economy grew in the fourth quarter. This included household purchases, business equipment, and also inventory accumulation. Instead of the lagging numbers showing a widespread slowdown, one area is largely responsible for the decreasing growth: net exports. In the fourth quarter, we saw a jump in imports and a decline in exports, which combined to pull the growth down by 1.7%. This is the biggest drag we've seen since 2010. Trade is an incredibly important part of our economy. As the most recent GDP reports show, any change in the balance between imports and exports can affect growth. In fact, without the decline in net exports, fourth quarter GDP could have beaten third quarter measures. As you are surely aware, we are currently in the middle of a hotly debated, headline-grabbing political environment. And some of the key conversations impact trade, from taxing Mexican imports to restricting visitors from certain countries. These new policies, and more importantly, are possibly the reactions from the nations they affect, could change the balance between American imports and exports, and thus our economy. Of course, we are not political prognosticators. We are financial planners. So while we will continue to closely watch these new policy developments, our focus remains on market fundamentals and how they're going to affect the plan, or your plan, and your personal goals. Throughout 2017, we will analyze the economy's underlying health and strive to find new ways to pursue your goals in a changing environment. And as always, we're here to help you understand what's happening, no matter the headlines. So that's it for this month's Educational Economic Update. Once again, this is Chad Stayskull with Eagle Wealth Management, signing off for the month of February 2017. Please remember, nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, please give us a call at 541-330-0220. We're happy to talk. Take care.